Well, over in the US late Friday, we had positive consumer sentiment data managing to overshadow the poor retail sales data we'd seen being released earlier on in the session. This week, the focus will be on our local retail data ahead of that right here in South Africa. And we've seen today the FNB BER Consumer Confidence Index results being released, staying virtually unchanged at positive 14 in the second quarter. To unpack the detail, Cees Bruggemans, Chief Economist at FNB, joins me now. Cees, thanks so much for joining us this afternoon. Well, after a huge jump from the fourth quarter to the first quarter this year, that jump from 6 to 15 points, some tapering off in sentiment being seen in the second quarter, we knew that such drastic jumps wouldn't have been sustainable in the first place. But what's your overall view of the figure coming in at 14 for the second quarter?
Yeah, so it nicely confirms the levels where we ended up in the first quarter in substantially positive territory. The real story, I think, is in the detail, where the view of the economy and the view of own finances remains on a much higher level of confidence. Well, when it comes to the question whether now is a good time to buy durables, fairly neutral to still slightly negative. In this particular quarter, the view of the economy actually improved somewhat, and the view about own finances deteriorated somewhat. Very difficult to explain just exactly why. One does expect movements of a few points. But when it comes to the economy, I suspect it has something to do with soccer rather than any other fundamental explanation. Although there was an interest rate cut in May, and traditionally that is also important. But I would have expected that to feed through to the own finances, and the own finances actually somewhat off. But it all gets balanced out effectively overall. For me, the real interesting feature is that there remain important consumer segments where the question whether now is a good time to buy durables remains extremely negative. Of the order of -20 to -33. And these are readings which suggest large majorities of people saying now is not a good time to buy. And we're talking here especially white consumers, English-speaking consumers, Afrikaans-speaking consumers, and people over the age of 50. Now, these are all in their own rights important market segments. And if these people remain overwhelmingly negative on that score, there remains this cautiousness when it comes to the durable side to taking up credit. Because
of course, to highlight is that we do have the Soccer World Cup currently underway here in South Africa, and one would have expected to have seen some kind of uptick. So had this not been the case, had we not had this event on our home ground right now, would it have probably declined, had it not been for the World Cup?
It now declined by 1 point. From the first quarter. I would say it would have declined by 2 or 3 points if I have to make an estimate on the view regarding the economy. Especially black consumers improved their outlook for the economy by a remarkable positive number. They are now at +34, which is a very, very high confidence score. In fact, one of the highest ever for the economy outlook.
Let's take a look then at some of the pressure points that are currently at play, because top on that list, one would assume, is job losses, the entire job market, and the way employment is playing out in South Africa right now.
For certain market segments, yes. For other market segments, it is the load of debt that they're still carrying. And having a high debt load is one thing, but if your mindset has become very cautious, given circumstances, given events, then that may just make you want to pull back. And of course, the last 2 years, we have seen prime 15.5 at one point. But we have also seen now 2 major financial crises internationally in the way this is reported daily. And it makes people very, very, very cautious to a degree where they decide that it is perhaps not a good time to replace durables and incur new debt. And we see that coming through strongly in the data. So despite the fact that overall a majority of urban South Africans express themselves confidently, when it comes to this question, are you prepared to buy durables, there remain a large majority who say, well, perhaps not at this point in time.
Yeah, let's take a look at that fact that we've got a global scenario playing out, bringing much uncertainty to the market scene and affecting sentiment. We've also got a lot of local dynamic entering the fray. What's weighing more right now when it comes to South African consumer sentiment?
I think that people are carrying too much debt relative to what they see, and they are still deleveraging. And I'm talking, of course, on average. At some point, these external risk elements will water down, while people will become more comfortable with the debt levels that they have given the level of interest rates, and also importantly, the way their income situation is changing. And this is a matter of time. But if your bonuses are down, you have lost your job or your business, and you're carrying a lot of debt, then this is not a happy time at all, and we see this strongly still coming through in the data.
If we take a look at outlook and what things are looking like moving forward, what's sentiment like around that?
I would expect over the next 12 months to see a further rise in this particular consumer confidence index, based on the idea that, especially when it comes to whether now is an appropriate time to buy durable goods, will start to improve, given that I think income situations will be better over time, but also the sense of risk that people have experienced over the last 2 years should reduce. I'm not talking about dramatic changes, but sufficiently for it to be registered in the consumer confidence index. So I would say we have not at this point in time seen the peak in the index. That is still a year or two down the road. Of
course, Cees, we are looking forward to retail sales data later on in this week. Your expectations on that front?
I would expect it to be positive.
Okay. Well, Cees, we're going to have to leave it there. Thanks so much for your time this afternoon. Of course, Cees Bruggemans is the chief economist over at FNB.